Welcome to Markets Now. I'm Michelle Rook with Beadle Paradigm Futures. Well, after kind of a mixed morning, we are starting to see here as we move through the mid-session, mostly higher prices, just a few exceptions, Kent, and feels a little more like a risk-on day than yesterday. But corn and soybeans trying to rally here. Do you think we got a little overdone to the downside? Are we done going down there?
Well, yeah, I mean, first of all, it sure is nice to just see some green numbers. It's been a while. We started out the morning after being higher overnight with another sell-off, and for us to recover quickly kind of gave the market a look like we are oversold. I think that the stochastics and the RSIs that I watch every day were at some of their lowest levels that we've seen here in many, many months. And so, it feels like with the way that we hit the market yesterday to start a new week, that there was maybe just a little bit of exhaustive type selling. Keep in mind that we did ultimately rally and close off of the lows yesterday. Not that we didn't close lower, but it acted as if maybe we've made an important low. We sold off early this morning and went and tried to retest those areas, and then ultimately here we're getting a rally, and that's all indicative of if nothing else, at least some exhaustion and maybe some sort of a short-term short covering kind of rally ahead of Friday's USDA report.
Yeah, I was going to say, we did have one of the worst starts here to both corn and soybeans for any year in recent memory here. But how much more do you sell off here, especially as you point out, going into the WASDE report?
Well, I'm thinking that we won't make any additional new lows ahead of the WASDE. Again, frankly, I think with the size of the short position in corn, and the fact that we've turned the position short in soybeans with a carryout that's still lower than each of the last 3 years. We may want to trim some of those positions from the funds ahead of that number on Friday, because while everyone is, I think, fearful of a bearish report, certainly growers are, you do have a big short position, and something that would be a little bit more bullish, could really drive a lot of buying into the market on Friday if it were to occur.
Yeah, no doubt, especially when you're leaning this hard short going into that report. A lot of it has been taking weather risk premium out because of the rains that fell in Brazil. But here again, do you think we got overdone with that whole thing as well?
Well, what's interesting about the rains in Brazil is that you're not getting a corresponding increase in production estimates out of South America. On the other hand, we've continued to see estimates fall. Most of the estimates last week came in lower once again, despite the fact it was raining in Mato Grosso. And we've heard some private estimates here this week that are actually significantly lower than some of the ones we heard last week. Now, I don't know how much credence I want to put in some of those estimates, but I do think that it seems fairly clear that we've got a smaller crop than we thought that we had in Brazil. Granted, Argentina is probably going to do just fine this year, and that's a big bump in production because they had only half a crop last year. But still, some of the estimates in Brazil are careening now toward between 12 and as many as 15 million metric tons below last year. So that takes away a lot of the increase in Argentina. And again, keep in mind, the U.S. balance sheet at the moment is still lower or tighter than each of the last 3 years. If we don't see exports actually fall a little further, or crush fall a little bit further, the soybean valuation in the low 12s, like we tested yesterday, seems to be awful cheap, and I'm just not sure we're going to get a whole lot cheaper than that unless we see something dramatically bearish on Friday's report.
Well, speaking of exports, though, you would have thought maybe we would see some flash sales with this kind of a pullback in all of the grains, wouldn't you?
Well, actually, what I was expecting with this pullback and with some of the rumors out of China is that we might see some flash cancellations, and we didn't see that. And
Okay.
so I wonder if that doesn't maybe, again, lead to some of this short covering here, at least ahead of the report.
Right. And in fact, if you talk about wheat specifically, there was talk yesterday that, or there's been rumors flying that China was going to be in buying US wheat. And then yesterday we did get kind of a cancellation rumor there as well. But today, do you think the bounce here is just short covering or not?
Oh, I mean, it's hard to say. We did not get a flash sale this morning. That doesn't mean that you're always going to get a flash sale every time we sell something to China. The quantity needs to be over 100,000 tons. And so it's hard to say. Once again, there were rumors of cancellations yesterday, and the fact that we didn't see one of those may be leading to some of this short covering, if that's what it is. The other thing I'd mention is that on yesterday's inspections report, we actually saw that we were loading some of the previous sales to China. I think, loaded at least a couple of boats of soft red off of the West Coast, and we also loaded some hard wheat off the West Coast as well. So destined for China. I think those are actually, somewhat good signs.
Yeah. Do you think maybe we haven't seen more flash sales just because of the shipping issues that we have currently going on?
Well, I think that the shipping issues are actually a very big deal. Okay. And if you think about what's happened here with a major spike in ocean freight rates that are tied to things that might be somewhat short term in nature. And if you're an end user and you want to bring, some grain to your country, unless you need it really badly and right now, a spike like the one we saw, might just kind of slow things down a little bit. But it doesn't necessarily mean that the demand won't be there. It's just potentially being delayed until, we see freight rates come back down a little bit.
Yeah. Live cattle futures back to the plus side. Of course, we kind of faded the weather yesterday and the strong cash trade, but today are we back trading weather, or what's the uptick from?
Yeah, well, I think it is weather, and we're talking about multiple systems that are going to come through the southern plains. I think it has to worry traders a little bit. We're talking about very cold temperatures, potentially a lot of snow, and maybe 3 systems over the span of the next week or so. So, I mean, was surprising yesterday that we didn't find a little bit more support, but yesterday seemed very much like a risk-off day in all commodities, and maybe we just delayed trading this, what I think is a little bit more bullish situation in the cattle, considering the weather that we're going to have.
You bet. Hog market, what do you think there? 4th day up here. Are we trying to form a seasonal low?
I think we are. If you take a look at the CME index and the way that it has been fluctuating, higher on a couple of days and then moving lower for a couple of days and then moving higher again, that's kind of the price action that you would expect when you are making a seasonal low. And obviously it's January. We would anticipate that from this point forward, seasonally, we would start to see higher prices. And once you start to get evidence of that, it's not hard to imagine that the funds who have a maybe 30,000 contract short position might start to want to cover that.
Absolutely. All right. Thanks for joining us, Kent Beadle with Paradigm Futures. That is Markets Now.